Okay, the next item then, we're going to go back to page 4 under sanitary engineer.
Our next item is a resolution certifying delinquent sewer and water charges in the Metropolitan Sewer District to the county auditor for collection. Board is requested to approve the resolution certifying the delinquent sewer and water charges for the Stark County Metropolitan Sewer District to Stark County, Summit County, and Carroll County auditors as of April 30th, 2017.
Move to approve a resolution certifying delinquent sewer and water charges in the Metropolitan Sewer District to the county auditor for collection as presented.
Second.
There's been a motion and a second to approve the, or to certify the resolution for the delinquent sewer and water charges in the Metropolitan Sewer District. We have with us today Jim and Natalie from the Sanitary Sewer Department. What would you like to share with us?
I have some reports.
Okay?
Thanks.
Thanks.
Thank you.
Okay. Natalie or Jim, you want to take us through this, please?
Yeah, Natalie.
Okay. All right, for the little chart that shows you the 2017 pre-certification analysis, then basically it's showing you how much, we sent out a letter around June of this year, letting customers know that they were behind on payments and that their accounts were going to be certified. And so at that time, we had over $1 million that was owed to us. And by the time certification time came around, then about 197,000 of that had been paid. So that's a little bit lower than previous years, but previous years too, we've had 2 notifications that have gone out prior to that. This year it was only 1 because we have a new billing system, so it was a labor of love to get out 1 mailing system. So, that wasn't too bad though, I thought, for the time period that they had to get that paid. So, and then the next chart is showing you basically how much of an increase that was compared to last year and what previous year's amounts were. This chart.
The blue one.
Yeah, I put it in order. So last year, keep in mind that it was 7.65% because we took some of our top accounts. We were going to have the Attorney General's office collect for us, and then they decided that they were not going to do that, but it was too late to put it back on certification. So that's why that number was so high.
So the percentages increase over the last 4 or 5 years have been about the same.
About the same.
Yeah.
And then this last one, the last papers are the actual top 20 accounts.
One of them's top 20 accounts, the other one's a top 20 customers, because I thought that it would be helpful to know what customers might have more than one property, or more than one account, and owed us, a decent amount of money. So we could have it both ways.
And some of those some of those accounts are repeats. Is that a correct statement?
Right.
Do you know how many are habitual
Probably.
tax deadbeats,
Yeah.
I will call them, and I don't care, that's how I feel.
It's at least, out of the 20, it's probably 15, at least, because.
So 15 of the 20.
Yes.
So what do we do? I mean, if they're there year after year after year,
They get certified, it goes to the property.
Property tax, and then if they
Property
sell, then
taxes.
it's, yeah.
It's difficult, some of these are landlords, so it's not the business
Well,
that
then
is
they shouldn't be in the
paying.
business.
Why they do that, I don't know.
Right.
Well,
Collect it
and
eventually.
again, it's public information, and I really don't care if they're printed, because everybody else has to carry the freight when other people don't pay their bills.
Right.
It's true.
And that's not fair to people that are responsible, accountable taxpayers. And I'm happy to say that the majority of our people in this county are. But it's not fair, and that's why I want to point out that they are habitual, because every year we see the same names.
It costs us additional time, then we have to take the time to put all that together and
Yeah.
mail those
Oh, yeah.
mailings. So there's additional costs in that, so it definitely costs us.
Colleagues, what do you think?
Well, in some cases, and I'm seeing in businesses in there, you know, it's unfortunate, but at some point, you've just got to say, it didn't work, and you've got to close up shop and walk, you know, what I mean, and because I think some of these, you know, you recognize and you say, wow, you know, I know they're trying to make it, and they think tomorrow's going to be a better day, but sometimes it just doesn't happen. And it's a tough business decision to make, so.
And some of the companies too say that because we have called them before, it's been a couple of years, but they found some way to use this as a tax write-off.
Which we believe is not legal.
A tax write-off, because you're
Yeah.
late on your sewer?
Because it gets added to their property
Added to the property
taxes.
taxes.
And so.
But it's our understanding that's not legal to claim that.
Well, it's a legitimate expense, so you're not, it's taken away from your profitability anyway, so I'm not sure they're
Yeah, I don't know,
correct.
that's just what they said.
I really
Yeah,
don't
we
sure
did.
that's
Yeah,
correct.
yeah, we did.
It's just like paying my electric bill. I mean, it's an expense to the
Yeah.
business.
Right.
And so that reduces your profit. Bottom line profit is what I pay taxes on. So, yeah, I'm not sure they're quite up to speed on that. Maybe I'm wrong. Not a CPA, but I've been around for a little while, so.
The one, I guess, that kind of surprises me, again, it's, again, public information, this WEA, W-E-A, Belden LLC on Everhard, the Burnt Wood Tavern, they just opened. They have not even been open 6 months, have they?
Part of the problem is that the billing continues, whether a property is empty or not. You know, so even,
They don't own the building.
well, Burnt Wood is the tenant,
Not the owner.
not the
Not the
owner.
owner.
And-
Okay.
Yeah, and isn't the owner, and so.
And so
unless you know
when
what
the old
lease-
one closed, then, okay,
It's
gotcha.
hard to say.
Take that
Did
from
it
them. That's
fall
right.
over into their,
It would
Their
if
name.
it wasn't, yes, if it doesn't get paid off at the time of closing.
so Burnwood might be up to date, but the
But-
previous
but they're-
people fell
Correct.
over.
Right.
So how do we do that? I mean, obviously, maybe they don't own the property, so it's really the property owner
It's the
that.
It's the property owner.
responsibility.
The tenant,
Billing's in his name.
yeah, the tenant is not responsible for that bill ultimately. It's the owner of the property.
But they're listed as a
But
point
they're
of
listed,
reference.
yeah.
and
Right,
where
just
they're at.
because before I've been
That could look
asked
bad
who's
for them.
there.
Yeah, I feel bad.
They might be paying their bills up to snuff.
Right.
and that could look bad.
Yeah.
Exactly.
Correct.
And somebody's not keeping up their end of the bargain. Any other questions or comments? Hearing none, all in favor?
Aye.
Motion carried.